I'm Todd Bookspan, and welcome to your neighborhood real estate show. The hyperlocal real estate show where real estate professionals talk about the neighborhood you live in or the neighborhood you want to live in. This episode is brought to you by homebuyeruniversity.net, your free comprehensive guide to buying or refinancing your home. Click over to homebuyeruniversity.net to get started online today. Hey everyone, I'm Todd Bookspan, and you're watching another episode of Your Neighborhood Real Estate Show, where I am super excited, actually more excited than you can see in my smile, to have Mr. Matt Baker, my business partner in the Bookspan Baker Team, here to talk about mortgages.
Sweet. I can't see a better thing to do.
Well, all these real estate agents, so we've been really fortunate now to have, 40-ish real estate agents be on the show, and they always talk about how mortgage rates are, the fear of mortgage rates and the mortgage process, they'll drip in a little mortgage stuff, and I try to keep us on the real estate track. And so I thought, what a great opportunity to have you and I sit down and talk about the leadership that you're giving right now to clients in the industry. But before I do that, we always have to go down that memory lane, right? Okay. So you've been in the mortgage business for a really long time. So kind of, what was that journey?
Well, I started in college, and I did graduate from college, but I know
Adam didn't believe that.
I know nobody believes that, but I did. But I started, I was like an early employee back in the day at Countrywide, and I came from a family that was in the mortgage business, so it sort of was like
don't hold it against Matt.
Matt didn't
cause the financial crisis.
I didn't cause it, but an easy transition into that, and I was like one of the only guys in college that actually earned a full-time job. I worked full-time and went to school full-time, and I saw the benefits of hard work, and I liked the mortgage business. It was competitive. You try to outdo yourself every month, and so that was in the 90s, and I've been doing it ever since.
And you had bad jobs, didn't you work in the mailroom or something?
I started in the mailroom when I was 16, but you don't hold that against me. But yes, I did.
That's why I brought it up.
Like doc drawing and funding, and I worked in compliance, and I worked in like every area of the business, which actually today it gives me a unique perspective.
Absolutely.
To be able to explain that kind of the difficult, complicated mortgage process to a consumer in a way that maybe they haven't heard before, because I've seen all of these elements and can draw on some of that stuff that may not have been easy enough to do. So I think that's the big sort of aha that I had, is as I learned through this process, I really became, how do I communicate the mortgage process in a way that makes it easy, or at least easier to understand? And that's, I think, the feedback I get from clients today and from realtors, is that I'm able to take complicated things and at least show a way to make it make sense to them in a way that makes sense. And that's whether it's an engineer client or someone who's like an hourly worker that maybe hasn't had college or has no financial experience, but yet I'm able to walk them through the process in a way that makes sense. So that's really, I feel like, my history, how I'm here, and to say we've been partnered, and not, you don't really often get two sort of heads, alpha males in a team together for as long as we have, and there's a lot of teams that start and then don't last our time, and so we've been now partnered over 10 years, which is really, I've started thinking about every year. I'm like, I can't believe it's 8 or 9 and now 10. And so, we've really done a lot and served a lot of families and helped them.
Over 5,000.
Over 5,000.
Over 5,000
families. Which is really an amazing, to the team, to the good people that we have working here that really are here to help. And yes, you can make a living doing this, but you also get the ability to help people, right? Which is really something that you can't say every business has that opportunity. I mean, we're really changing people's lives.
I was about to say that. We're changing people's lives. Yeah. And I say this, it's one of the things I respect the most about you, is that, we originally recruited you to come work at a branch that we were running, and then really just said, gosh, if I'm going to continue to help do the branch and grow like I am, we needed someone who wasn't just an assistant, like someone who actually could lead. And that's when we teamed up. And you were confident enough in us, I would say kind of a little crazy, because it's what you didn't mention was the other Bookspan that we're partnered with, my wife, who runs the operations and would never jump in here and be on this podcast with us, although she'd be really good. But I always joke that you teamed up with the two of us, so when you have 3 partners, you're always outvoted.
Right.
And the funny part about it, and I always joke about it, is I really let you and Tara make the big decisions, and I obviously give my 2 cents, and I feel like that's been the success piece, because it was interesting, right? We've seen lots of teams, nationally and locally that have started together and poof. And I think it's, I don't know, I always joke about it and sound corny, but I mean, I've been super proud to have you there. And I think that, we kind of, as a team, you fill a void from a leadership perspective and really a knowledge perspective. And it's, you kind of nailed it. You work with first-time home buyers, you work with, people, I don't never want to say, that are just less sophisticated financially, which is okay.
Yeah.
And then you work with some really, I've seen the stacks of tax returns of people that, a couple dozen companies, and, you work with those high
real estate investors
well.
with, LLCs coming out of the woodworks,
all
of those.
Oh yeah. So you tackle the hard loans that transparently when I was doing loans, I didn't want to do.
Yeah, and that's fair.
Hey, I got a great, let my business partner, Matt, he specializes in working with difficult people like you.
Yeah, see, that's happened many times. It's like, and I don't know if I really am appreciative of that half the time, but I do like the challenge.
Well, it's all out of respect, though.
And I do.
If I didn't think you were better than me at it, I would let you know, because I like to think I'm better at certain things, but most of the stuff you kick my ass. That's the first time I've sworn on this show.
Wow. I bring out the best in you, I guess. Well, my hope is that if I can help people explain through the process, I think that's one thing. But it is really difficult on tough deals to kind of see through it. Be able to, can we really make this deal work? And I do have the experience in all those other elements. And it also does help that my dad used to coach the CEO of Fairway. So when there is a problem, like, call Matt, and have Matt help you. I think there's an extra bit of benefit.
We do have the hotline.
We have like an ace in the hole there that, like, hey, we can get stuff done that maybe others wouldn't. But we also can structure in a way to, like, even let an underwriter or the legal team be able to see through it to make it make sense.
Yeah, I think that we got a lot of brain power in team between your knowledge and your experience and Tara's legal background.
I was trying to think between us, just us alone, but even adding our team members and, like, our operations manager and our head of, like, our pre-approval underwriting. I mean, over like 150 years of experience. Like,
it's something crazy.
It's a crazy amount of experience that, like, is all around process, helping consumer through the process, but also the underwriting, the complexity of it. So I'm really proud of that, and I really am proud of the team. And even in this market, we've done really quite well, and so that's a testament to everybody.
Yeah, so there's a couple things. So of course, as I'm thinking this, I'm like, gosh, we can have like a 27 show series where we dig in a future time into like cool products like debt service coverage ratio loan, where an investor can buy a house with buy a house with using the rent to qualify. So we'll talk about cool stuff like that. But you just mentioned the team, and I think it's really important. I think one of the things that when I talk to real estate agents, we have individual agents on here, we have team agents on here, and so one of the things I think that has been really great for our team is we do have a super experienced team. And so we've got, our process is a little unique because we pre-underwrite loans, and then we've got, again, I think what I say is, besides the fact that we've been business partners for 10 years, I mean, our processors, Angela and Shanna, they've worked for us over 12 years each. Brandy, our pre-underwriter. I think on the operations side, I think Michael's maybe worked for us the least amount of time, 5 years. And when you have an industry that turns people over every 5 months, and you got to average, every team member's been here for a long time, says something about, I think, our culture and the way the team does it. But kind of talk through that pre-underwriting process and how a team is advantageous to the consumer.
Well, first and foremost, I would say that the mortgage process in general, in my opinion, is always been backwards. When you have the underwriter, the decision maker on the transaction, involved in a 4-week closing, in the third, potentially fourth week, you're talking to the decision maker, should have been maybe at the beginning. So right? I mean,
good way of putting it. I've never put it that way, but you nailed it.
It's a backwards process that most consumers don't understand. And so we've flipped it ourselves through our own efforts, our own energy and time. And it's our expense that we have these people hired onto our team to pre-approve them at the front end so that we don't get to the underwriter and have a problem. So 9 times out of 10, it's loan officer not doing that task up front that generates the problem at the end. Right? It's they didn't see it. They didn't look at the red flags. They didn't look at the pay stubs. They didn't study.
There's a question that the underwriter would have that they just didn't have that. They didn't go through the fine-tooth comb or didn't have the experience.
And we'd say that I would venture to say that 90% of loan originators, there's some great teams out there, many that work for Fairway, but there is probably 90% of the loan officers, especially the big banks, that don't run automated underwriting at time of pre-approval. right? They wait until the loan is under contract, ready to go.
Because it costs them money, right?
Well, it does cost them
Austin,
money.
Tell people what automated underwriting
But an
is.
automated underwriting is required for every loan, every time. You have to have an approval. So if you're doing that later in the transaction, you're making a big mistake. Because if you don't know, it's like you don't know there's a problem until you run it through. Well, you better run it through early then. And that's where our team has developed that process to where we do all that stuff on the front end to eliminate that issue. And that saved us more times than I can say, but also it really gives agents who we work with all the time the confidence to know that we're actually doing that homework up front so that they don't go out and show a client for 3 months and then have a problem at the end. And in this market where it's tough to find properties, buyers are going, in the car for months looking for places. And how would you feel if you were an agent and you were going out there for 3 months and then the third week of closing, not even the first week or the second week, but the third week it gets to underwriting, we don't have an approval. What do you mean?
Well,
shouldn't you have done that at the beginning? And that's where the mortgage process has always been broken. We're not going to fix it. All we can do is just change our process to allow that to not happen to our team members and to our agents and clients that we work with.
And the interesting thing about it is, for us in the last 10 years, 10 to 20% of our business every year is fixing other lenders' mistakes because, they'll issue the pre-qualification letter based off of the conversation. And then by the time that someone actually looks at the documentation, because again, it's garbage in, garbage out, right? Someone puts in that they make a certain amount of money with their overtime, but maybe their overtime isn't usable, or maybe they got a bonus last year, but the bonus isn't going to continue and it's not usable. So they're using that. They're using unchecked information that our team is going to check up front to ensure they don't have that problem.
And you'd be surprised how many buyers actually have no idea how much money they make. All they know is how much money they get in their bank account.
Yeah.
So when they say, well, I make $1,000 a week, you're like, well, is that that's what you get, or is that what you get? Because again, we look at gross income, not net income. So there's a big difference, and a lot of consumers just don't know. So you have to ask the right questions. You have to dig a little deeper on the pre-approval, and that's what we do, right? Like I tell you that our team in that pre-approval process, it's like a loan officer's dream to have that. Almost like a Cliff Note version of a loan file at our disposal to run through to see if any potential red flags can derail this, because that's the big issue. And man, our team just does it in such a good way that makes really our job a lot easier.
Well, it makes our job easier. It makes the real estate agent's job easier, because what I always see is the CPR at the end. When any little thing goes wrong, because even to think about something that's beyond the loan officer's control or the realtor's control, there's something at the end. There's the home they're supposed to come in and repair something, they didn't repair it. So then there's 77 phone calls at the end about that, and it's this dance you do, and that's where the stress comes in a transaction. To me, if I'm buying my house, especially my first home, or even if I'm buying my third or fourth home, I want to know up front that it's going to close, right? That's really the nerve-wracking thing, and it's we do it all the time. But even when I bought my last house, you're still. I know my numbers are going to work, but I'm still like, oh, I don't have my approval yet. Like you want to have that, even though I did it. So knowing up front, I think should hopefully give the consumer some calm. But it also really has helped in a competitive market situation, right? Because we can close faster because we've already got the documents, and I think that's the misnomer is you get documents from a client up front that someone else might not have asked them for. But they all need the documents eventually, right?
Right. And why would you ask for it too late in the game where they're now feeling frustrated? Like, why didn't you ask for this at the beginning, right? So it's always better.
But some people get frustrated up front. So I just say, hey, if you're thinking, why would I give that stuff now? It's because then you don't have to give it later.
Then you'll have to give it later. And we make sure that we pre-approve you in the way in which it's going to work for you. And ironically, and you talked about loan programs and varying loan programs. There are, even in the conventional space, there's different ways you can go, right? There's Fannie Mae, there's Freddie Mac, there's other agency, there's other ways to structure a loan. And so sometimes I feel like loan officers get in this mistake. They go down path A and they sell out for that path instead of realizing, but that was not the right path. You should have gone to path B, but you didn't really see through the documentation far enough to know that you're going to have a problem where, hey, what if you went down path B, that wouldn't have ever come up. So there is a bit of experience, I think, required to be a good loan officer. And I would say in general, there's a lot of agents that, are brand new that go and work for a team. I think you want the experience of the team behind you to just be the most successful you can be, especially with dealing with consumers that have so much on the line, right?
Yeah, it's your trajectory to get better, right? I mean,
Right.
do you want to look at 12 loans this year, or do you want to look at 12 loans this month, right? There's a big difference. So talk about the whole idea when something's pre-underwritten. How does that help someone negotiate in a competitive situation? How does that help? What does that look like?
Well, in Arizona, we standardize the pre-qualification form, so it's really based on the level of checks that you have on a standardized form. So it's pretty simple. The more boxes you have check, the stronger the pre-approval is. But we like to take it even a step further and encourage agents to let us know when they're writing an offer, so we can make that extra phone call to give the humanity, because this is a very human experience, right? There's a buyer and a seller, and they're stressed and nervous, and they just want to make sure that the deal is going to go through. So an extra phone call from the lender that might take us 30 to 60 seconds is really that extra little thing that we like to do to help buyers win, especially in a time when there are multiple offers still, although there's less in this particular market. There's always an opportunity to create that human experience that I think helps buyers win and helps our agents win, because the less agents have to write offers on multiple properties, and everyone's just going to get paid that much faster, and that's important to a lot of agents.
Yeah, I think so. A couple things. I think you're spot on. That's the number one, but I think it's also the whole idea of the listing agent. When it's pre-underwritten, if they're like, well, it'd be a win for my client if you can close in 2 weeks, guess what? We can do it, right? If they say it'd be a win for, if it's a win for my client, whatever they think it is, the bottom line, it gives certainty to that listing agent too. That listing agent's representing their buyer, and the listing agent wants to look good to their buyer. And so if they know that this is more likely to close than that big bank where he can't get a hold of a loan officer because it's Saturday afternoon, to see what the person's done. And you talked about that pre-qual form. It's called the PQF for those of you who are nerdy and want to hear it. It says, I've reviewed your credit, check. I've talked to you, check, right? That's what most of them have on it. And the other ones are like, oh, I looked at your W-2s. Yes, I've looked at your tax returns if tax returns were required. Check, check, check. And so that's really what an agent is going to look at that. But they also know that sometimes loan officers may not actually have all that. So then they're going to call us if we haven't proactively called them, and say, hey, have you really looked at this stuff? And they try to ask questions by the Privacy Act that we can't answer. Right? We can't say, like, what's their credit score? We're not going to say 700, but because they always try to do that. But it's to me, you kind of nail it. They also love the communication piece. They know, hey, well, this is a loan officer who's actually being proactive. This is a loan officer who I want to do business with because I'll look good to my seller when I do business.
And we also let them know that, hey, we do loan status updates, which is another Arizona real estate form. So we do loan status updates during the transaction, every Tuesday, but we also do it at critical junctures, right? The first 3 days, when the appraisal comes out. All of those things are good to communicate in that initial phone call, because it says to the listing agent, hey, we're here, we're mean business, we know what we're doing, and we're ready to get this deal done for you.
Well, the funny part, that'd be a great question for a real estate agent who's listening, or a person who's listening, to ask your loan officer, hey, how often do you send out loan status updates? And if they pause and if they say, what is that, then you should run.
Don't
but I can just remember working at a mortgage company where there were other loan officers. I can remember someone saying, oh yeah, I'll get you that loan status update, LSU, right away. And then they literally went out, they just made up dates, and they just did all that. And I was just like, well, that's not what they want. And so, again, it's by contract, we have to send out within the first 6 days of them going under contract. So we just send it out when we send out our disclosures, and then every Tuesday.
And I actually use the loan status update to coach a lot of new agents. I do a lot of new agent mortgage training, and kind of I would call it Mortgage 101, but we really walk through the loan status update, because for those that haven't really bought many homes, or maybe if they did one home 8 years ago, that form was, or 10 years ago, it was when the form came out, right?
The LSR, I get asked right?
So it's a little different. And so really the LSU is a good way for a newer agent to have a kind of a heartbeat of the loan during the process, so they can really see what's happening. And it usually offers some indicators of, like, are things not going the way they should, based on some just normal timelines that you would see on a weekly basis. So if you're not getting it weekly, you definitely want to work with a team that is. and then of course you also want to just make sure that you're paying attention to that. How many times I get the loan status update and then no one ever looks at it? Like, look at it. It's a really good, viable.
Hey, Matt, is the appraisal in? Well, yeah, we sent you the
we
LSU,
sent the
last
LSU
week,
2 days ago. So be mindful of that and look for that kind of communication. But that's what we do, and that's where we found the process, right? We found those holes in the process that have been challenged in the past, and we've just created processes around it to make us, try to be as easy and seamless as possible.
Well, and I remember when we first sent them out, we just said, it comes out of our CRM, it's actual stuff. And so, there was, when we first decided to do it, I hate to say it, we weren't as good of a team as we are now. And so there was some loans on there that looked kind of ugly because we weren't going to fake it till you make it. We were actually going to give accurate information. And I do think that if more real estate agents got them from their loan officers, they would realize early on that that loan was way off a track, right? And so I think it's.
Luckily, we don't have as many of those.
Well, it's just really rare.
As others, but you
if
still.
a client quits their job, then that's one I could think of this year where but luckily it's still closed on time. But those are things that are beyond the control of the loan officer. And every once in a while, again, something changes. It's an interesting economy, and so I think that part's cool. So talk about what right now. The market is changing here. It's a little bit different, and you've been in this business for so stinking long. You've seen every market and every cycle and up and down. And so, what do you, when you've got a client who's calling you who's nervous about buying a house and financing and interest rates? What's that conversation look like?
Well, a couple things, and I do try to use pictures and data to kind of help explain a particular market. And we can't always forecast, right? Forecasting is kind of looking in the rear view, looking at things that have happened at maybe other parts of the time that maybe make some sense. Inflation, right, has happened in the past. This isn't the first time. So, things like that, rates rising, well, when have been other times? I think an interesting stat I just came across and I'll share is that when the Arizona homeownership rate at its peak was at close to 72% back in 2006.
Dang.
Right? And in 2001 it was 65%. So it had gone up that 7% in the 5 years when rates were in the 6s and 7s. Okay, so preface that. Well, now we have rates in the 5s, high 5s, but right, and we're back to 65% appreciation. I'm sorry, home ownership rate, right? So 65% home ownership rate. Now, when 2020, we were at 68%. So we lost 3% home ownership rate between 2020 and 2021. You're like, well, why is that? How is that significant? Well, rates hadn't even started to go up yet. Yeah, they were still really
super good.
We're really good in 2021, but yet home ownership rate declined, and I'm calling that the forgotten buyer. I'm talking the contingent buyer, the first-time home buyer with low down, or the down payment assistance buyer that couldn't find a house because sellers weren't willing to work with them.
Right, they had so many offers, they wanted the easiest one.
They wanted cash, right, or 100% down, 50, 80% down.
They were taking the pre-qual letter that looked the best without necessarily sometimes peeling back the onion to see if the person really was solid.
Absolutely. Well, in my estimation, that's 150,000 people that could have bought in 2021 that didn't. And gosh, wouldn't that completely change the demand dynamic currently if those people came back into the market? And when you look back and you're complaining that rates are too high, look back between 01 and 06 where the average rate was for a mortgage, and it was in the 6s and 7s, and yet we gained 7% home ownership rate during that period.
Yeah.
So interest rates aren't always, so I have graphs for that, so I can show a buyer and an agent who's like, I'm getting a lot of feedback that says, I'm gonna wait for the market to crash. Well, I don't necessarily think that's going to happen, and I have all this data to prove it, and still have more people than homes in Maricopa County. So there's a lot of other reasons why I believe that, but that's just one sort of good reminder to people that rates may take a pause in your decision making, but it's not going to stop you from making the decision. You just maybe need more time to process it. Well, rates spiked in like May and June, and now we're in the fall. So you're going to see that it just takes buyers a little bit of time. If rates doubled, you're not going to just go the next week and go okay, I'm going to absorb that, right? You're going to have to take time to figure out your finances, and that's where I feel like we're in. So be ready. If you're an agent out there, go talk to these first-time home buyers. Talk to these borrowers that maybe didn't win a property in 2020 or 2021. Because now is the time for them to actually get an opportunity to buy something, and the benefit to grow home ownership rate is only going to help community. It's kind of like, we get in this for the money, but at the same time, we get in there to help people. Like we talked about it earlier. Yeah. We want to help people, and how do you help people? Well, you show them the path to home ownership, and you show them that interest rates high don't correlate to demand being low. Like that, again, there's an initial reaction. But over time, the law of averages has to kick in. And so my belief is that demand will start to trickle in. You've already started to see some of that being reported. Demand's ticking back up from the lows of July. And so I think that that's going to continue to happen. And I'm just going to be ready for it, because I think that there's plenty of first-time home buyers and or lower down payment buyers that totally missed because they just got frustrated. They couldn't win a home. And now's their time. So if you're in the, hey, I want to do good in the world space, like camp, like you want to leave the world better than you found it, like this is your opportunity to change the future of 150,000 potentially, people that maybe didn't buy or got frustrated to buy. So that's my mission coming into the rest of the year, is like we have this absolutely opportunity to, and most people look at cycle turns as an opportunity, right? So if you take that and just double down on it, I think we're going to be really, really, home ownership in Arizona will be really strong for a long time.
Well, I love it. So, I always say you're super passionate about it if people didn't just get that and hear the animation in your voice about how passionate you are. So I think it's, again, if I'm a consumer, I'm thinking, I want a loan officer who's got the knowledge and the willingness to show me the picture, show me the data to help me make a decision. Because what I think you do is it's an emotional decision. You just said it. People got scared because the interest rate went up, but they didn't actually take the time to look at it from a financial perspective. They didn't say, well, what does a 0.5% increase in interest rate mean? And now they dropped to 0.5%. What does that mean? And so I love the fact that you take the time to help them understand from a financial perspective, while still understanding the emotional side of it, so that you can help them through that part. Because I think that's where most loan officers miss it. They don't have the empathy. They don't have the passion to help change someone's life. When someone told me, I want a backyard for my kids to run around in. I want a backyard for my dogs to run around. You know what? My kid has complained because for 5 years she's had white walls and she wants pink walls, and I can't wait to make her walls pink. Like that to me was what tugged at my heart. In fact, still gives me chills to think through those conversations. And I just know how passionate you are, not just to help the client through the process, but also you're passionate about helping the real estate agent. Because I know every week you're teaching at real estate companies. You invest time. You're like, I got that 3-hour class, and I'm like, oh gosh, better you than me. Teaching that class. But then it's also just what you're doing day in and day out, one-on-one over the phone and in person on Zoom with clients.
Yeah, and to take it one step further, in this market, the interest rate is always going to be an entry level fear. Like that's just a sort of typical thing, because the buyer's the two things the buyer always is most concerned about is cash to close. We call that like out of pocket, right? And then of course their monthly payment. But if you can show them in a rising inventory market how you can just massage a little bit on the price, get more seller concession, we can more than balance the rate differential to make the number payment wise work, but also maybe bring them less cash to close, or a combination of both. And so having that flexibility now in a rising inventory market is really what you can, I think that's another level of like sitting down and explaining to a consumer and walking them through the numbers. And we use a tool, Mortgage Coach, that walks them through that so they can see that in a more, remember, picture sells, right? So you need the visuals in order for them to understand it. And so if you're not working with a loan officer that has that experience, but also those tools, I think you're really missing out. And if you're an agent listening, there's obviously the Bookspan Baker Team. We've been doing it a long time, and we have a good team. We have a good team, but we also try to take that extra time to sit there and explain the things. It's not just saying, here's the process, here you go, have a nice day. Like, we're not order takers. We do try to explain the why behind it, and I feel like that's, I think that's a good differentiator for the Bookspan Bakers. We always try to explain why. We don't just ask for a document. We try to explain why we need the document. Why behind it. Because I think it also solidifies our 5,000 clients for being past clients.
Well, that's it. I think that's
our future clients. Sorry.
Right. Well, it's also calling them a past client. Our 5,000 families we served are clients. They're still people that we serve and do annual mortgage reviews for. And so I think that's great. So I'm like all in on the fact that we're going to have to be doing more of these interviews. So what else should we say when we're talking today about just all the things we covered, without making this like a 6-hour thing, because I think we could keep going. But are there any other? I guess maybe the other points is just let's talk like basics, right? So Fairway's a direct lender that works directly with Fannie Mae, Freddie Mac, VA, FHA, USDA. So that's kind of a cool thing.
We have a jumbo, like a a plethora, a big word, plethora of jumbo investors that we work with that do all the range of things. Bank statement loans, the DSCR loan you're talking about, some cash flow stuff, some investor stuff, some
just kind of the out of the pocket stuff that doesn't fit in the Fannie Mae Freddie Mac bucket.
Yep, because if it's not a conventional loan through the Fannie Freddie, you have your FHA, VA, USDA, but you have all these other little things that you can potentially put a loan in. So I think that's key. One, Fairway, I think $33 billion or something year to date.
Yeah, we're top 7 lender in the country this year.
Huge volume, and you don't get to that volume if you're not priced competitively. You don't get to that volume if you don't have good underwriting practices and principles, that you don't try to make sense deals work. So all of those things have to be true if you're doing that kind of volume. And so I just leave that as a Bookspan Baker Team, Matt Baker, Todd Bookspan, smart guys. We have a big team that
at least one of us.
Well, smart people behind us.
Too.
We have smarter people behind us.
Yes, we do.
And that's probably the most important. And then it allows us to be, with the backing of Fairway, allows us to be as competitive, aggressive from an interest rate perspective, aggressive from an underwriting perspective. We do find the way to make the sense work and make the hard deals work. And that's where, maybe is one of my superpowers. I don't know. You give me these tough deals,
Absolutely.
and I grind on them till they close.
Well, and so let me throw a couple things. One program you didn't mention was down payment grants. So one thing that people don't know is they're technically less profitable to a mortgage company. So a lot of loan officers shy away from them or don't offer them because they make less money. And some companies even, what I would say, would violate the compensation rules and actually pay their loan officers less money. So oftentimes someone will tell me they talked to a loan officer who kind of talked them out of it when they really didn't have the money, told them to start saving, and they didn't buy a house, which which I think is a tragedy, because someone said you don't qualify, but it was really they didn't have the program or they didn't want to sell them the program. Right. So I think that's one thing. And then the other cool thing is that the founder of Fairway, Jake Jacobs, is we're family owned. We're a employee owned company, but he actually started doing loans right here in Phoenix, right at Tatum and Shea
in the 80s.
In Tatum and Shea. So it's all about loan officers here, and his motto is kind of why not us. So I think it's one of the things that makes it great.
On the down payment assistance piece, and it's probably worth mentioning because there was a lot of people on social media and were saying that DPA was done. Like, hey, there's no DPA with down payment assistance. We acronym everything. It's DPA. Exactly. So DPA was done in like May, June because rates spiked up. And for those that don't know, down payment assistance, all it really is in exchange for a higher interest rate, you get this grant money towards your down payment. And so when you have that, rates spiked up, there wasn't that margin that they could use to do the program. So they basically discontinued the program. But however, since then they've reevaluated that, and now they do other things. There's forgivable, there's non-forgivable, there's probably 35 different down payment assistance combinations that you can bring back to a buyer who doesn't have the down to consider, right?
And plus, during that time, Fairway had non-state grants that they kind of came in to supplement it. They just weren't as good,
right?
But we had it,
and I think that I've been telling people, hey, just because they're sort of in hibernation because rates had gone up, it didn't mean that we weren't still taking people and educating them on why down payment assistance may be an option for them in the future. And guess what? I just closed one recently that literally had to bring in $2,000. They brought in $2,000 earnest money, and then they actually got $100 back at closing of their $2,000. So for $1,900, they bought a $360,000 house.
That's awesome.
I mean, you couldn't rent a house for that, right? You with first, last month's rent and deposits, it would cost you $4 or $5 grand to rent a house at that price range.
That's
so
awesome.
How cool is that for a home buyer who never thought they could own a home now can get? And how good is that for a community? I mean, again, look the butterfly effect of that is really the ability to compound that is really transformative in that community, in that person's life, and that family's life. They have 2 young kids, so really the best reason why you do it, right?
Love it. All right, well, if you guys haven't figured it out, that is why I'm proud to be partnered with this guy, Matt Baker. Appreciate you so much, and this is just going to be the start of something fun. You guys are going to hear random thoughts from Matt and Todd talking about loans in the future.
That's awesome. I love it.
All right.
All right,
sir.
You bet.
This episode is brought to you by HomebuyerUniversity.net, your free comprehensive guide to buying or refinancing your home. Click over to HomebuyerUniversity.net to get started online today.